Hi, I'm Lisa Leiter. In Chicago Business Today, Loop Capital. Chicago-based Loop Capital is the largest minority-owned investment bank in the nation based on headcount. Loop also did more underwriting last year of muni bond deals than any other firm, including big names like Citi and Bank of America Merrill Lynch. And despite major concerns among investment gurus that some cities and states may default on their debt, Loop Capital Chief Executive Jim Reynolds sees it differently. We recently sat down to talk about the city and state's budget crisis, the markets, and his firm's expansion. Jim, thanks for joining us today. So you've said that these fears of muni bond defaults nationwide are overblown. Why?
It has become popular to sort of create this state of panic around municipal debt. Certainly, a part of it has to do with the fact that it became a global product with the Build America bonds, and it got bigger, and we got new investors. But I think a lot of it just had to do with pundits, if you will, not understanding the nature of the security of a municipal obligation.
How much of an impact did the passing of the tax increase have on our bonds and on your opinion as to how much risk Illinois is of defaulting?
Well, one, I never, even before the tax increase, I was not one that felt we were headed towards default. In Illinois, I think debt service is maybe less than 10% of the budget, and the highest priority in Illinois expenditure is debt service, payment of the bonds. So it was never an issue of default. I think what the market started to do is to confuse declining credit quality with default. And Illinois was certainly in the former category. With the tax increase, though, I think Illinois signaled, I think, to the country and to the world, because it's a global issue now, that states do have the power to address their fiscal issues, and Illinois did.
What else are investors going to be looking for from the state and even from the city as well, which has its own fiscal crisis?
Yeah.
What are they going to be looking for?
With the state of Illinois, investors are cheering, and I checked the spreads as we talked a little bit off camera. Illinois bonds rallied about 25 or 30 basis points. That means lower in yield after that decision, and that's a pretty substantial move. Lower
in interest rate, lower borrowing costs.
That's right, lower borrowing costs, and that's a substantial move. And I would not be surprised if the rating agencies didn't give an upgrade to the state of Illinois, or certainly take them off negative. I think the city of Chicago has to and will address many of the same issues. It's all of the cities and states in the country have the same problems: declining tax base, declining property tax, corporate tax, real estate taxes. But if you've looked lately, things have started to trend up.
Illinois has among the worst credit ratings of any state, and you think the tax increases are enough to change that?
That's my view. I think that the rating agencies have to recognize the actions that the state took. And they were not easy actions. As you know, for a politician to raise taxes, that's not something that they think is highly likely to assist them in getting reelected, generally speaking. And so to show that leadership, they did. And for in the municipal bond industry, since Illinois was the lowest rated state and still is, the market was looking to them, to Illinois, for leadership, and they provided it. So I certainly think it's enough, and the market is telling us it's enough with the way they're trading in the debt right now.
Loop Capital worked on more than 800 bond deals last year nationwide, more than any other bank. What are your plans for expansion? You're growing. How much are you hiring this year?
Well, thank you so much for those kind words. And first and foremost, I took a vacation as we ended the year. We got a little rest. And then somewhere in there, we bought a firm in California that was I think, one of the best financial advisory firms in the country. We bought them, we just closed the transaction this week to expand our western region. So those folks will be actually the hub of our West Coast region. We've also added to our Northeast region, New York. Chicago is our headquarters, but we have a substantial office in New York. We've added there. We're going to be adding in Texas and Florida. You know, clearly from my earlier comments, I like the muni bond market. I'm not worried about any wholesale defaults or significant credit deterioration from where we are now. As a matter of fact, I'm looking for credit to get better. So we're expanding across the board.
All right, Jim. Well, thanks so much for stopping by today.
It's a pleasure. Thank you for having me.
Jim Reynolds is chairman of the Chicago Housing Authority, and it's also worth noting that Loop Capital is jointly lead managing a $3.7 billion state bond deal to fund employee pensions. And that's this edition of Chicago Business Today. To read a profile of Jim Reynolds, go to chicagobusiness.com. Thanks for watching. We'll see you tomorrow.